Hi, my name's Bill Bergman. I'm with Truth in Accounting in Chicago. Today we're going to be talking about the fiscal challenge facing us. Who is us? What is this fiscal challenge? Well, let's think about the United States. Is that singular or plural? The U.S., what is that thing? Is it the federal government? Is it the states? What is this fiscal challenge? And is it facing the federal government or the states or both? Who is sovereign in the United States? The Fiscal Challenge, a fascinating project developed by Mike Aguilar at University of North Carolina, Chapel Hill. Well, your challenge under the Fiscal Challenge, as it's been assigned, is to recommend ways to stabilize the federal government's debt to GDP ratio. The basic point is that under current law and policy and looming demographic trends, including the retirement of the baby boomer generation, this ratio is projected to rise dramatically in coming decades. And so high that many people believe that the federal government's finances simply aren't sustainable. As a result, many people are trying to think about ways to alter current law and policy in order to keep this from happening in the future. There's some combination of tax increases and or spending cuts or other alternative, potentially radical solutions to try to fix this fiscal challenge. One other concept underneath this is that the longer we wait, the bigger the problem is, and there's a cost of delay. So our goal here with the webinar is simply to introduce you to the fiscal challenge and some resources and background that can be helpful for you and for all the student teams that are interested in going forward and addressing the fiscal challenge. Four things we're going to talk about today. We're going to focus most on the financial report of the United States government. However, future webinars we're going to talk about data resources, in turn the accounting standards and the governance of the accounting standards leading to those data resources, the Federal Accounting Standards Advisory Board, one of those elements, and finally the nature of the truth in finance and accounting in a world where accounting standards aren't always perfect in developing an accurate financial picture. Finally, we'll have a webinar looking at some out-of-the-box ideas about addressing the fiscal challenge facing us. So what is this thing, this financial report of the U.S. government? It's basically an annual financial report, just like the ones that are produced in the private sector. Our federal government produces an annual financial report that not too many people in America even know about. The report is an annual report, and it includes audited financial statements, just like the ones that are produced in the private sector. Fundamentally, this financial reporting is no small feat, and it's also something that produces a process that, in theory, is critical for our republic in the United States. It helps to secure the accountability of the government for the public money or the public purse. That's what it should do anyway. Underlying this report is something called the Statement and Account Clause, which is a clause in the United States Constitution in Article 1 of the powers and responsibilities relating to the Congress of the United States. Unfortunately, it's pretty interesting to note that the modern financial report of the U.S. government never was produced until the late 1990s in the United States, making one wonder how well did we really ever live up to the Statement and Account Clause, and in turn, in light of the auditor's opinion on this financial report of the United States government, whether or not we are even today, how well do we actually live up to the statement of intent in the Statement and Account Clause. So what is this thing, the Statement and Account Clause? It arrives in Article 1, Section 9, Clause 7 of the United States Constitution, and here's what it says. No money shall be drawn from Treasury, but in consequence of appropriations made by law. And a regular statement and account of the receipts and expenditures of all public money shall be published from time to time. A simple but direct statement that our government should produce not just spending and borrowing for us, but an accurate record of that spending and borrowing and under appropriations that are made by law in order to produce accountability for the spending coming from our money. So the Statement of Account Clause, here's two things from history that help to illuminate the importance of this clause in our constitutional republic. One is from Justice William O. Douglas in a Supreme Court case, United States versus Richardson in 1974, a dissenting opinion, by the way. And second, Joseph Story in his eminent piece on the Constitution, the Commentaries on the Constitution, something that goes way back to 1833. And here's just simply a couple of quotes from Justice Douglas in United States versus Richardson. From the history of the clause, it is apparent that the framers inserted it in the Constitution to give the public knowledge of the way public funds are expended. No one has a greater personal stake in policing the protective measure than a taxpayer. Indeed, if a taxpayer may not raise the question, who may do so? And second, the statement of accounts of public expenditures goes to the heart of the problem of sovereignty. If taxpayers may not ask that rudimentary question, their sovereignty becomes an empty symbol, and a secret bureaucracy is allowed to run our affairs. Again, colorful language, but it helps to illustrate fundamentally what we're talking about here is something that secures a republic as opposed to a monarchy or a tyranny. We have a constitutional republic in the United States, and one of the most important safeguards for securing popular sovereignty is this clause in the United States Constitution. Secondly, here's Joseph Story's thoughts from the Commentaries on the Constitution I'd like to share with you. The object, and he's talking about the object of the statement and account clause, is apparent upon the slightest examination. It is to secure regularity, punctuality, and fidelity in the disbursements of the public money. In arbitrary governments, the prince levies what money he pleases from his subjects, disposes of it as he thinks proper, and is beyond responsibility or reproof. It is wise to interpose in a republic every restraint by which the public treasure, the common fund of all, should be applied with unshrinking honesty to such objects as legitimately belong to the common defense and the general welfare. In other words, we're not talking about small potatoes here. We're talking about tyranny versus republics and things they told us about in school for a decade about the nature of governance in the United States. We fought a war for independence on these principles. So what do we know and when do we know it about our federal government's finances? Perhaps, in theory, one of the most important ways to secure that knowledge is through this financial report of the United States government. It's produced annually. It's produced early every year, following what the federal government follows as a fiscal year that ends September 30th each year. The report includes the financial statements for the government, the notes to those financial statements, which are also very important, just like the private sector, the MD&A, or the management's discussion and analysis, and the auditor opinion on the financial statements. Similarly, just like the private sector, all those financial statements are audited for their conformance with generally accepted accounting principles. However, those principles are not developed like they are in the private sector, and we'll have more to say about that. The report's been produced every year since the late 1990s under the modern format. However, it's important to remember that it's been produced with an opinion from the auditor that's called a disclaimer of opinion, which is a form of flunking the audit. In other words, the financial report of the U.S. government has received a flunk opinion on its audit every year since the late 1990s. The financial report of the U.S. government is published by the Treasury Department every year. It's a long, thick, complicated thing. It's got 256 pages in the latest report. The latest report available, sadly, is for 2017. The current report is not out yet because it's been delayed by the government shutdown, which implies that financial reporting is a non-essential feature of the U.S. government. Once again, another question whether or not our statement and account clause really matters in the United States. Those financial statements in this report are prepared under accounting standards developed by the FASAB, or the Federal Accounting Standards Advisory Board. That entity was developed in a 1990 Memorandum of Understanding legally, an agreement between the Treasury Secretary in the executive branch, the Director of Office and Management and Budget in the executive branch, and the Comptroller General of the United States, which is the lead entity for the Government Accountability Office, or GAO. That's Congress's audit arm. So we have these three different executive branch and congressional entities agreeing to produce this Federal Accounting Standards Advisory Board back in 1990. What does this thing look like? Well, the first thing that arrives in this report is the opening message from the Secretary of the Treasury Department. The report's produced in the Treasury Department, and just like an annual report, you have an opening letter from the lead executive officer in the financial sector, and here we have this Treasury Secretary with a letter. Here's an example of the very first thing that the most recent report says. Treasury Secretary Mnuchin has a line, "This report is a thorough overview of the federal government's current financial position and future fiscal projections." So then he gives us the first sentence. This is important, right? The summary statement is, the country enjoyed a pickup of growth in 2017. And one bone we have to pick with this is the fact that right away we're getting a government delivering a financial report about its own financial position, but it's talking not about its own financial position, it's talking about the condition of the rest of us. Unfortunately, this is something that happens in many years in the financial report of the U.S. government, which takes credit for economic growth. This is not a GDP report. This is a report on the finances of the federal government. Let's look at the previous year's report, which was from then Treasury Secretary Jacob Lew in 2016. The fiscal year 2016 financial report, the final U.S. financial report of the Obama administration, reflects an economy that has come a long way since 2008. I am proud of the work we have done as a country over the past 8 years to address our economic challenges, and am pleased to share this strong report. Once again, this is not a GDP report. This is a report on the government's finances. And he's claiming that this is a strong report, but I think if you take a close look, and we have, at the results in 2016, the nation's government's financial position deteriorated significantly in the same year that he's calling this a strong report. My basic point in delivering those last two observations is simply to introduce the idea that we can't take words or numbers at face value. The question arises, who can you trust? And at the end of the day, as citizens, the first people we have to try to trust is ourselves. That's our job as citizens in order to hold government accountability. Let's just, for some perspective, a lot of people look at that financial crisis, that massive financial crisis in 2007, 2009, and they start blaming people, including the big banks or the Fed or the Congress or the housing industry. But at the end of the day, as citizens, maybe we also can very simply just take a look at the mirror and look at ourselves. Maybe we all need to take responsibility. Well, that's what this fiscal challenge helps you to do. You get a chance to go and deliver some solutions and take ownership of something that really is yours, and that's the federal government's financial situation. So briefly, what are the main sections in this financial report of the United States government? You've got an introduction with the results in brief and summary of the report. You get into more thorough management discussion and analysis, like we see in private sector annual reports. Then you get an important section, which is delivering the opinion letter of the Comptroller General and the GAO opinion on the financial statements. That's an opinion, again, whether or not the financial statements are conforming with generally accepted accounting principles. From there, we do get those financial statements. Just like in the private sector, the federal government has its versions of things that lead to things that are like the income statement, the balance sheet, the listing of expenses, summary statements of the various components of the national debt. Underneath the financial statements, you get the notes to the financial statements. You get some required supplementary information. Finally, you get a few appendices that are interesting and important. And then you get the full GAO report on the finances of the government and the financial reporting, which illuminate the overall opinion of the GAO on the financial statements. So here's the first table or chart that appears in the results in brief in the most recent annual report. What we have is a statement of net interest in the first chart, both historical and projected under current assumptions and current law and policy. And very simply, one thing to take a look at in terms of the fiscal challenge is that effectively that white triangle at the very top of the chart in the upper right section. What this white triangle, more or less, is about, it shows the amount of total net interest projected to be incurred by the federal government in coming decades as a percent of GDP. And it's this interest expense gobbling up so much more of the federal spending, which drives many people's concern that federal government finances simply aren't sustainable. This net interest is effectively not going to be allowed to be paid without impairing other spending obligations, or at least that's the theory. What drives that increase in interest? Very simply, the debt held by the public, Treasury securities that are issued by the Treasury security to finance the government. Again, under current law and policy, the implied future spending is so high relative to current expected tax revenue that the amount of implied borrowing to make up the gap is going to lead to a massive increase in debt held by the public. And not only the increase, but the debt held by the public as a share of overall GDP, which again, many people believe simply this is something that is currently projected to happen. But that's not a prediction, it's a projection. This is something that can't happen without significant economic consequences. So what's your fiscal challenge under this fiscal challenge? Your challenge is to take that increase and stop it from happening in the future. You've got to find some combination of spending cuts and tax increases to stabilize the debt held by the public as a percentage of GDP. Currently, that number is about $16 trillion, and it's projected to rise to 3 times GDP by 2090 under current law and policy. Today, it's about 1 times GDP, and under current law and policy, it's projected to do something it simply can't do, according to some people. The federal government's financial report includes a statistic that helps to illustrate how big this problem is. And that statistic is called the Fiscal Gap. It's basically a dollar amount that's expressed in terms of the percent of GDP, and it's effectively the combination of non-interest spending reductions and receipts increases that amounts to 2.0% of GDP on average is needed to prevent the debt to GDP ratio from rising over the next 75 years. In other words, one way to go about addressing this problem is to take this fiscal gap calculation they give us and go to work finding combinations of non-interest spending cuts and tax increases that help us keep the debt to GDP ratio from rising over the next 75 years. Your fiscal challenge is going to involve some very challenging economic and financial analysis, but there's a lesson from history here that helps you understand that there are times when faced with complicated financial problems, you can also do some very simple things to help illustrate risk in the entity that you're examining. And there's some very interesting and possibly growing interest in rhetoric analysis as a tool of financial analysis. What this chart shows very simply is AIG's credit default swap. AIG is American International Group, one of the largest financial firms in world history and one of the most complicated set of financial statements out there. AIG, or American International Group, basically imploded in the financial crisis in 2008, 2009. Again, this was a very complicated financial valuation exercise going into the crisis. However, you can do some simple things faced with complex, ambiguous financial statements. What this chart shows, again, are AIG's credit default swaps. And what this simply is a number of times The annual report for AIG included the phrase credit default swap. And it was only in there once, twice, 3 times. And then in 2007, the financial report, which came out in early '08 before AIG imploded, the use of the phrase credit default swap exploded. The people writing this report were scared and worried about the growing financial problems in AIG's credit default swap portfolio, as well as broader range of instruments exposed to risk in the housing crisis. Again, this report came out before the stock price imploded and was a good warning signal. That's the kind of thing you can do with the financial report of the U.S. government in addition to your financial analysis to illustrate the problem. And here's one way to simply go about trying to do that. This is the frequency of times that the financial report of the U.S. government mentions the term or uses the term fiscal gap. And what you can see is since 2010, the number of times has been rising significantly through 2017. Here's another example. The growing concerns about the federal government's finances have led to questions whether or not the finances are sustainable, and growing questions about the implications of the federal government's finances for future generations. One way to simply estimate that is how many times the federal government's financial report uses the words future generations. How many times does that phrase appear in the report? And it's gone up 10 times since 2009. The government is spilling more ink, at least in principle, about how much it cares about future generations in this report. Similarly, here's the number of times the word sustain appears in the annual financial report of the U.S. government. From 2005 to 2017, this frequency went up about 10 times. The word sustain appeared about 150 times in the 2017 report in a variety of different ways: sustain, sustainability, unsustainable. And the basic point is that every time it was used in growing discussion about the concerns about the sustainability of the United States government's finances. Here are a few more charts that depict the financial trends in the U.S. government as examples of things to look at and start thinking about as you address your fiscal challenge. For instance, in that executive summary, here's a picture of the U.S. budget deficit and the net operating cost of the United States government. These are two different but related things. And from 2015 to 2017, you can see both of these things rising significantly in the last 2 years of the Obama administration presidency. The budget deficit and the net operating costs, again, are two different things. The budget deficit is more of a cash accounting-based number, and the net operating costs add other expenses on an accrual basis, which we believe is a more accurate way of depicting the federal government's finances as well as any other state, local, or private corporation. And that net operating cost has gone up significantly greater than the budget deficit in the last 3 years. The question for you right now is whether or not this chart is upside down. Going up may look like a good thing, but this is not a good thing. This is going in the wrong direction. That last chart, maybe that was upside down. Well, here's a table that may be upside down. What this table shows, table 2, the net operating cost versus the budget deficit, starts with the net operating cost and gets to the, quote, bottom line, unquote, the budget deficit down there at the bottom. What it does is start with that accrual-based net operating cost, and then it identifies 5 different sources of changes in accrual obligations that help explain why the net operating cost is a bigger negative number than the budget deficit. But we believe the better way to think about it is to start with the budget deficit and get to the real bottom line, which is the net operating cost at the top of the table. From 2016 to 2017, the net operating cost rose. What are we talking about when we're talking about deficits or related net operating costs as opposed to debt? Oftentimes, we shouldn't take it for granted that people know what the difference is. The basic difference is that debt is a balance sheet concept that's developed at a point in time, the amount of, for instance, what you owe at a given point in time. Or more fundamentally in accounting principles, a liability can be thought of as a probable future sacrifice of resources in the future. A deficit, on the other hand, is more of an income statement type of thing. The income statement gives you results over a period of time. And a deficit or a surplus in this context reflects the difference between revenue and expenses. If the expenses are higher than the revenue, you have a deficit, and vice versa. If the revenues are higher than the expenses, you have a surplus. The next thing in the report is the auditor's letter, and what we get there is the disclaimer of opinion. That's the opinion of the GAO. And a disclaimer of opinion, I mean, you can get a, quote, clean opinion, which is unmodified, or you can get an adverse opinion, which is a fail opinion, telling you you didn't get conformance with GAAP representation. You might also get a modified opinion, which suggests that your financial statements are generally in conformance, but there are significant exceptions. And then finally, you can also get a disclaimer of opinion. And that's the opinion that the financial report of the U.S. government has received every year since the late 1990s. The main reason being material weaknesses in accounting at the Department of Defense. Other weaknesses identified by the GAO include the inability to reconcile intragovernmental accounts, the amounts that various entities in the government owe each other, the process of putting all these financial statements together, and other items that are material. For instance, the identification of the obligations or liability for cleaning up past environmental disasters resulting from nuclear weapons testing, things like that are difficult to account for and a source of the material weaknesses in accounting in the federal government. We've had some progress in recent years improving federal government accounting and the process of getting to a clean opinion. But once again, it's, at the end of the day, we're using these financial statements, but how much do we know and when do we know it? There's a fair amount of uncertainty. And that's why that fiscal gap that we can hang our hat on as a way of addressing the fiscal challenge facing us, it's possibly a good thing to think about that that's just a lowball estimate of the degree of the challenge facing us in the future, given the uncertainties that we have in the federal government's finances. Among those other financial risks discussed leading to that opinion, the GAO letter cites risks facing the Pension Benefit Guarantee Corporation, which is an entity that guarantees private sector pensions, even though it's a federal government corporation. Two other things that got us into the financial crisis are these Fannie Mae and Freddie Mac government-sponsored enterprises. You got the U.S. Postal Service, and a very interesting entity is the Federal Emergency Management Administration, or FEMA, which goes into action in national emergencies. Here are 4 selected financial statements in the federal government's financial report: the statement of net cost, the statement of operations and changes in net position, the balance sheet, and the statements of social insurance. Here's a look at the statement of changes in net position. This is effectively the income statement for the federal government. You got the revenue up there on top. You've got the net cost of government operations below that section. You have some intergovernmental transfer accounts leading to finally the net operating cost or revenue number that we delivered to you in that chart earlier in the presentation. Take a look over there on the right on the consolidated basis for the major sources of revenue. Which one looks like it's the biggest? The answer is by far it's the individual income tax, the biggest source of revenue for the federal government. Here's a look at the balance sheet. You've got the assets, you've got the liabilities, and you have the net position, just like a balance sheet in a private sector entity. Take a look also at the size of those assets. The total assets here, we're talking about $3.5 trillion or so of total assets. We've got liabilities identified of $23.9 trillion. 23.9 is bigger than 3.5 trillion by a lot. And you've got a hole there at the bottom of the total net position of a negative $20.4 trillion, which is part of your fiscal challenge. Speaking of rhetoric analysis, here's some text introducing that balance sheet we just showed you with $20 trillion more in liabilities than assets. There are, however, other significant resources available to the government that extend beyond the assets presented in these balance sheets. Those resources include stewardship land and heritage assets, in addition to the government's sovereign powers to tax and set monetary policy. Are these comforting words to you? Take a look at the capital G in that first government and the possessive S in the second government. The government's sovereign powers to tax and set monetary policy. Here we are. Perhaps we don't need to worry about our federal government. It can tax us and inflate the value of our money away. On the other hand, maybe that's cause for concern. Here's another statement to take a look at that's very important, the statements of social insurance. And what I've got here is a section from that statement, which is basically the Social Security system. This statement has, for the last 5 years, present values identified for future revenue from participants that have reached eligibility age, participants that haven't reached eligibility age, and future participants in Social Security over the next 75 years. From there, they do the same thing. They give you present values for the future expenditures. And what those numbers identify are those present values. You take the present value of the future revenue and you subtract those future expenditures present values, and that gives you the net position for Social Security down there at the bottom line. And you can see that $15 trillion hole, which has grown more than $3 trillion since 2013. You may want to also take a look at the different classes themselves individually on the net present value, especially what this implies about Social Security for future participants. So here we are with a Social Security net present value of a negative $15 trillion. Speaking of generational issues, I'm going to ask you the question, do you think this number should arrive on the federal government's balance sheet as a liability? Where is it on the federal government's balance sheet? Does the federal government owe this stuff? A very curious and problematic question arrives that the federal government actually doesn't include Social Security or Medicare as debts on the balance sheet of the federal government. Historically, the reason claimed for not reporting these as liabilities is that the government controls the law and can change it at any time. And if that's true, the person expecting the benefits can't necessarily count on them. And therefore, it's not a liability of the government. Contrast that implication with the front page of the Social Security Administration's website that was new, that was introduced in 2017. It was called your My Social Security Account facility. Here's what that website used to look like. You got a young guy looking off into the future, and the message is, set yourself free. Open a My Social Security account today and rest easy, knowing that you're in control of your future. Trouble is, the federal government doesn't include future Social Security obligations that are unfunded as debts on its balance sheet. And the reason it argues it doesn't have to do that is that the federal government controls the law and can change it at any time. What does that say about the honesty of this message that you can set yourself free and rest easy knowing that you're in control of your future? I shared this idea with a group of economists at an economic conference about a year and a half ago, and one of the economists in the back of the room had a very interesting observation. That's not a deceptive message, he said. That guy is standing on the edge of a cliff. We told this story, and a friend of our organization developed the following new picture for this website. Today, this picture doesn't appear at the Social Security account website. The Social Security Administration has no longer giving us this deceptive message. So there's an introduction to the financial report of the U.S. government, a resource for you to develop your answer to the fiscal challenge facing us. I hope we helped you understand that report, and I hope we, more importantly, got you motivated for addressing that issue and for the considerable gravity of the issues underneath here. This is about tyranny versus republics and the performance of our republic and securing the consent of the government, fundamental constitutional principles that hold our country together. In addition, I hope we helped you consider that we shouldn't always take accounting results and financial reports at face value. The important thing is to think about the truth underneath what they tell us, including the risks of political math. Have a good day, and I hope you have fun with your challenge.